Everyone, Paul, Expert Investor Academy here. I'm here with Mr. Alex Moore. Mr. Alex is new to our network, not new to me. I've been talking with Alex back and forth for, I think, a couple of years, the first time we spoke. And Alex is a professional. He's an expert in second mortgages and private lending, and specifically in facilitating that for some of his own investments and for other people also. And that's not a new type of investment, but I really like Alex's approach to it. He's been very successful at it, and I had a good connection with him. So I thought he'd be a great person to teach this to our network, and he'd be someone who I would trust with my money if I wanted to lend into a second mortgage. And I'm very curious about this myself, so I want to learn, and I want you guys to learn also. So Alex, welcome. Tell us a quick story about yourself, where you come from, who you are, so people know what's up.
Sure, of course. So I actually come from much more of the background, I think, that a lot of the real estate investors that are part of this network actually do. So instead of necessarily just purely mortgage and finance, I actually come from understanding the asset and then scaling up businesses that have to do that. So first I started in property management and investment management I ran a property portfolio of 200 properties. Launched a condo management branch of a property management company after that, and then a real estate brokerage branch of that same company. After that, wanted to get into the tech side of things and learn how to, hyperscale a company. So using commercial property relationships, I helped grow a company called Ritual. I'm not sure if you're familiar with that, from 4 markets internationally to about 50 markets across 4 continents. We did that in about 3 years.
Wow.
So by the time I left there, my kind of purview was the Northeast United States, New York, Manhattan, Philly, Boston, Washington, Jersey City, Brooklyn. That was my collective home.
Got it.
So after that, I wanted to get into the mortgage business. I joined a digital mortgage company. And then after that, a digital real estate brokerage. So, the transacting of each of these assets, the asset is something that I know very well. I've been involved in every single aspect of it. That's the management, the purchase and sale, the financing, and now, of course, the lending as well. So, and securing, making sure these investments go well is something that, is second nature to me.
So what is it? Sorry to interrupt you. What is it specifically about private lending and doing the second mortgages that attracts you as an investor? Because you've been around the block and you have a choice between all these things. What attracts you there? What
I love about it is, honestly, the return on time is it's very tough to beat. So again, I've done the long, buy and hold, refinance, the burring, all great strategies, super useful. I still use them. But private lending is another useful tool in your belt to be able to cash up in the short term while still minimizing risk, and you can still earn passive double-digit returns. So for example, for our investors in second mortgages specifically, they earn 11 to 12% per deal. So that's these pay back within 12 months. So it's a pretty good, as far as capital allocation goes, it's pretty tough to beat. I know it's tough to, sometimes as a real estate equity investor, we're on the sidelines looking for the right property. Sometimes we've got the ball in our hand ready to go, or the bat in our hand ready to swing, but there just aren't, sometimes there's not that many deals that come through. However, investing in first mortgages, even seconds, it's a really good way to, while you're waiting for that nice pitch to come through and that, bat in hand, you can still earn passive double-digit returns.
I think that's a good point, because a lot of us, and me included, I have a portfolio of properties. I want to keep buying properties, but it's not the greatest time. Rates are up. Although there's some good deals to be had, and I've got some of them. They've been more land deals. I've dropped my cash in there, haven't even need financing. But it's more challenging to deploy my money in traditional multifamily than it is. We're still doing it, but just much more challenging. So if you're on the sidelines and now you can't qualify for the kind of property you want, why would you want your money to sit there dying, or let your stock just sit there doing nothing? To me, that's a huge benefit, and I'm glad you touched on that. You might as well put it to good use and earn a 10, 11, 12%, but do nothing in between and have a professional like you sort of mitigate the risk and handle the in between. that make sense?
Exactly. And kind of the way this works is like, I mean, if you're going to have a few $100,000 either in equity or in cash, it's going to get eaten away by either if interest rates have gone up, as we know, hasn't been great to our equities, but fine because there's no money out of our pocket. But if it's in your bank, cash is in your bank account, I mean, you're losing it at the rate of inflation. Like it's actually leaving your pocket. So if you can have that ball in hand and then choose your allocation strategy and deploy that, in a good way, you're going to cash up for the next property. So you're going to be in a better position to actually deploy again, once that loan is paid out. And again, they're within 12 months. Some of them are 6 months. Some of them are bridge loans, which is at an even higher interest rate. So, these can be a really good alternative. And again, it's all a tool in your belt. We're all investors here. We try to use every type of, strategy we can to better suit our goals of financial freedom. And private lending can be an amazing way to do it.
That's a great word. I like the tool in the tool belt kind of thing. It's not like you have to sell your properties and now do all second mortgages. It's, you got to take the best opportunities that are in front of you with what the market can bear. So that's a really good point too. So for someone's watching who doesn't know if they might qualify, this is meant for capital outside of the RSP, or can you use your RSP also?
So that's a good question. We actually can, there's ways of doing it inside the RSP as well, TFSA, registered funds. Right now we're mostly outside, but we're actually in the process of setting up that capability as well. Which is really exciting. So that's something that's that's a TBD coming to BMG. So a little teaser there, but yeah, we will have that capability in the future as well.
Nice. So if what's the relatively the minimum amount of capital, just so people can qualify themselves, that you would need? Is it like 100? Is it 50? What's the minimum you would recommend for somebody?
Yeah, I would say the minimum is probably 100. And I can syndicate as well, so we can have a couple of folks in to each deal. We don't want to have more than probably 3 or 4 per deal. In the second mortgage space, a lot of these deals are in the 3 to even 600,000 range in second mortgages. First mortgages, rates of return are 8 to 9%, and they're closer to 8 or 9% is the return, and the deal size is between probably 850 and 1.2, so they're a little bit bigger. Second mortgages, you're returning between 11 and 12%, and they're between probably 2 and 400,000, 2 and 500,000. So if you have for folks that have that ready to go, I guess the asterisk on here is that a lot of these deals are pretty quick. That's another thing. Things a little bit different. That it's a bit of a learning curve versus just buying a property and then closing on it. You got it at 6 weeks or whatever. With these private loans, a lot of them close within 7 business days, 8 business days.
Nice.
Right? It is quicker. Some of them even are closer to 3 business days. So we really have to have, that's a specific type of investor that if they have the cash, they can you charge a premium for quick close, obviously, but they're a little bit quicker. But yeah, for folks that either have the equity or have the cash, the option to close in a couple of weeks can be a really good one.
Got it. No, that's great. So let's save the juicy details for the call. We're going to be on June. And we'll go over this in a lot more detail. And even if you don't have at least 100,000, this is a great way to learn because you want to have this tool in your toolbox for when you do, right? So when you have a few 100,000 available, you can buy a property, you can set aside 100, do a second mortgage, you can do something with your RSP, and you can have you can be what I call a sophisticated investor, and that's somebody who can deploy their capital efficiently in multiple different avenues, still within an asset class like real estate. And this way you're not missing opportunities. So I'm glad you're coming on, Alex. We'll see everybody June 4th.